All right, let's talk about money. In this explainer, we're going to cut through all the jargon and give you a really simple way to get a handle on your finances. Ready? Let's dive in.
You know that feeling, right? Payday hits your account, you feel great, and then, poof! A week later, you're wondering where it all went. It's super stressful. But look, you're definitely not the only one feeling this way. And the best part? There's a way to fix it.
And this is why we have to talk about it. Get this. A whopping 11.5 million people in the UK have less than 100 quid in savings. I mean, just let that sink in. That's millions of us just one flat tire or a broken boiler away from a real crisis.
But here's the good news. You don't need to be a math whiz or have some crazy complicated spreadsheet to get this sorted. It all comes down to just three simple steps. So let's ditch the anxiety and start thinking about a game plan.
Okay, step 1. Track your cash.
Think about it. You can't really plan a journey if you don't know where you are on the map, right? Well, your money is exactly the same. The first, most crucial step is just figuring out what's coming in and where it's all going.
And this quote just nails it. We often think financial freedom means making tons of money, but it's really about being in the driver's seat with the money you already have. And you can't be in control if you don't know the score.
Now, the main tool we use for this is a budget. I know. That word can sound a bit scary, like a financial diet or something. But try to think of it differently. A budget isn't about restriction. It's about empowerment. It's your plan. It's you telling your money what to do, not the other way around.
And honestly, getting started has never been easier. You could go totally old school with a simple notebook, fire up a spreadsheet, or just download one of the many amazing apps that do most of the hard work for you. The point here isn't to make yourself feel bad about that extra coffee. It's just to see the facts, to spot the patterns. You might be surprised by what you find.
All right, so once you've got a handle on where your money's been going, this is where it gets really interesting. Now we get to decide where you want it to go in the future. This is the moment you switch from just reacting to your bank balance to actually being in charge of it.
To build that plan, you got to be real with yourself. It really comes down to one simple question. Is this a need or a want? Needs are the things you absolutely can't live without. Roof over your head, food, bills. Wants are, well, everything else. Getting clear on that difference, that's the secret sauce to unlocking your ability to save.
And this leads us to what is basically a financial superpower, delayed gratification. It sounds fancy, but all it means is choosing future you over right now you. It's saying no to that little impulse buy today so you can say a huge yes to a bigger goal down the line, whether that's an amazing trip, a deposit on a house, or just the peace of mind of having an emergency fund.
Okay, so you're doing great. You're saving money, amazing. But then you hear this nagging little thought, this idea that the cash you're carefully stashing away is somehow losing its value over time. What is going on there?
Well, that's a little thing called inflation. In a nutshell, it just means that over time, stuff gets more expensive. That 100 quid you saved last year? It's still 100 quid today, but it buys you less stuff at the grocery store. And if prices are going up faster than the tiny bit of interest your bank is giving you, then yeah, your savings are actually losing their buying power. It's why just hoarding cash isn't always the full answer.
Part of planning for the future is also getting smart about debt. We're often told that all debt is just plain bad, but it's actually a bit more nuanced than that. Think about it. Borrowing money for something that could actually make you wealthier in the long run, like a mortgage on a house, is a world away from borrowing for, say, a fancy holiday that's over in a week. Learning the difference is a huge part of a solid financial plan.
So, you're tracking, you're planning. Awesome. Now for the final piece of the puzzle. Protecting everything you're working so hard to build. Because building wealth isn't just about watching the numbers go up. It's about making sure you're safe when life throws you a curveball.
You've heard this a million times, and for good reason. Don't put all your eggs in one basket. It's one of the oldest and wisest bits of financial advice out there. It just means you shouldn't bet everything on one thing. Spreading things out, whether it's your savings or investments, is what makes you resilient when things don't go according to plan. Insurance is another massive part of this protection plan. Really, all you're doing is paying a small, manageable fee now to protect yourself from a potentially massive, life-altering bill later. It's just a safety net, pure and simple, for your phone, your car, your health, you name it.
And let's be real. In the world we live in now, protecting your money also means protecting yourself online.
This isn't optional anymore, folks. Using strong, unique passwords, being super suspicious of weird emails, asking for your details, and just thinking twice before you overshare on social media, these are absolutely essential habits to keep your money and your identity safe.
And one last really serious warning on protection. You have to be aware that there are predators out there, like loan sharks. These are illegal lenders who use fear and charge absolutely insane interest rates. That number on the screen, 719,000%, that's not a typo. It means a tiny loan can become a mountain of debt almost overnight. Please, always stick to official, regulated lenders.
Phew, okay, we've gone through a lot, but I want you to see how it all boils down to those 3 simple ideas. The goal here isn't to turn you into a financial wizard overnight. It's just about giving you the confidence to take that first small, smart step today.
So if you remember anything, remember this, your new 3-word mantra. Track, plan, protect. First, you track to see what's really happening. Then, you plan to tell your money where to go. And finally, you protect what you've built. That's it. That's the whole framework.
It all comes back to that classic piece of advice, doesn't it? Take care of the pennies, and the pounds will take care of themselves. It's so true. It's the little, consistent, smart choices you make every day that really add up and build a secure future for you.
And that's pretty much it. But look, knowing all this stuff is one thing, doing something with it is what really matters. So I want to leave you with a question to think about. After everything we've talked about, what's the one small thing you're going to do this week to start mastering your money?